Hi, I'm Jeremy Jenkins, Member Relations Director at Vizo Financial, and this is your update for the July 2019 FOMC meeting. As expected, the Fed lowered the Fed funds rate by 25 basis points yesterday, their first rate cut since 2008. The rate cut brings the Fed funds target range down to 2 to 2.25%. They also announced an end to their balance sheet reduction in August, which is a month earlier than expected. The Fed has been preparing the markets for a rate cut since their June meeting when they pivoted towards cutting rates. Although they held rates steady in June, James Bullard, president of the St. Louis Fed, dissented in favor of a rate cut. His reasoning was that inflation had been tracking below the Fed's 2% target for some time, and that risks to economic growth had increased globally. The rate cut he advocated came 6 weeks later, but the July vote, like June's, was not unanimous. This time, 2 regional Fed presidents voted against the rate cut, preferring to hold rates steady for now. In their official statement, the FOMC retained some language from June, stating that the labor market remains strong and that economic activity has been rising at a moderate rate, while the unemployment rate has remained low and household spending has picked up. With the economy doing so well, why did the Fed lower rates? The Fed gave a few reasons for their decision. Among them are soft business investment and inflation readings below their 2% target, both overall and when the more volatile food and energy costs are excluded. They also highlighted inflation expectations that have not moved recently, and little in the way of wage inflation, something you wouldn't normally expect with a tight labor market. They lowered rates in light of the implications of global developments for the economic outlook, as well as muted inflation pressures. This is backed up by recent data showing a global manufacturing slowdown and low inflation in the EU, Japan, and the US. Trade concerns between the US and China played a role as well. The FOMC did not release an updated dots plot at this meeting, but in their statement they told us they will continue to monitor incoming economic data and will act as appropriate to sustain the expansion with a strong labor market and a goal of inflation near their 2% target. Fed Chairman Powell held a press conference after the release of the Fed's decision. We'll discuss what he had to say after the break.
One of the things that keeps me coming back to the conference is the fact that the information is relevant to what we're doing.
The location is superb. The speakers in the lineup are always top-notch. I always learn a great deal of information coming to the conferences.
The staff has done a fantastic job of making sure that not only is the information pertinent to some of the jobs and the roles and responsibilities I have at the credit union, but also it gives me a networking opportunity to meet with peers and colleagues.
Welcome back. In his press conference on Wednesday afternoon, Fed Chairman Powell discussed the Fed's decision to lower rates while facing a skeptical press. The skepticism came because the Fed cut rates with unemployment low and the economy growing. In prepared remarks, Powell described the cut as insurance against downside risks from slowing global growth and trade concerns, and as a means to promote a faster return of inflation to their 2% target. Over the last 12 months, core inflation has only averaged 1.6%, well below the Fed's target. The Fed views today's cut as a mid-cycle adjustment to policy, essentially recognizing they went too far with their December 2018 rate increase. However, the markets didn't view Powell's mid-cycle adjustment comment positively. They saw it as a hawkish sign that the Fed may not provide the level of cuts they were looking for. Going forward, the Fed's policy will depend on incoming data for the economic outlook, as well as the risks to that outlook. On a dovish note, Powell said the Fed is committed to taking appropriate action in order to sustain the expansion while maintaining a strong labor market and targeting 2% inflation. This desire to maintain the expansion, which is currently the longest on record, means there are likely additional rate cuts to come. The question is, how many more cuts will we see and when will they come? Prior to yesterday's meeting, the markets had been pricing in 75 to 100 basis points of cuts over the next 12 months. Fed fund futures are currently showing 60% odds of another 25 basis point cut in September. At the end of his press conference, Chairman Powell said that this is not the beginning of a long series of rate cuts, but that he didn't say it's just one either. Look for FOMC members to provide some clarity in speeches over the next few weeks. Well, that's the update for the July FOMC meeting. Thanks for watching.